Hello, Warriors. Hiya, Brock. Ren. One. Hiya, Money. Michael. Arena, how are you? Okay, so a little disconnect. Yen is down and gold is down. So looking at gold here, it's putting on a valiant effort to try and hold. And perhaps we get one more wave to the upside. I'm not short, I'm not long. And I've been looking for a place my place to short NASDAQ. I missed the order here. The off number is 12,130, and I'm still trying to be patient to see if we test it. But look at this range that we've had in the NASDAQ you could go back pretty much to here, and it's been a pretty tight range, almost 100-point range, which it would complete in half an hour. So it almost reminds me of crude, when it moves sideways for months at a time. Anyway, I'm still trying to be patient. I'd like to see one more push up. Doesn't have to happen. And this trend line right here, it's actually threatening it. Might even be, maybe the line's not so great. I tell you what, I'll just adjust it to this low right here. And, we could break trend here back under about 11,958, back underneath the 50% level. S&Ps are fading from early morning highs up here as well. Let's take a look at the 15-minute. S&Ps right now look better than NASDAQ as it has, except for a few days this week, and maybe only for intraday. I think it was on Tuesday where the market kept rallying, S&Ps rallied, and NASDAQ could not. Small cup. Okay. Looking at Euro, it's put in another pretty negative candle here, up here. It keeps trying the 78.6 level. It's hard for me to get bullish here because the pound is already above 78.6 and on the verge of making new highs here. So there's nothing new I'm doing. Tried to bottom pick yen yesterday, and yen's coming off. If we get back over 410, it's going to look okay, but maybe we need to test this 78.6 level. After this decline and the big explosion, this was a planned trade around the 61.8 level. So 61.8 is important because of this candle right here. Nikkei, they say Japan's out of recession, which began in Amira in 1989. So it took, 31 years for them to come out of this recession. So, yeah, it's a long time, isn't it? Euro pound, with the pound being stronger than euro. Here we go. I'm underwater on this trade by 20. Still thinking that this is just correcting this move here. But in order for EG to prove itself, we need action back over, 89.80-ish. Okay. And Euro yen looks like it's challenging this moving averages confluence here. So it's a little too long to be a flag, and it's got to hold 23 or it's going to have some problems here. That's the way it looks to me. Dixie, Someone commented to me that crude oil has rallied because of dollar weakness, but really, if you look at the dollar, it's been sideways since August. So I don't really think dollar weakness has played into this. I talked about it last week that there could have been something geo because it's crude's not rallying on countries shutting down because of COVID. And then I think it came out yesterday that President Trump called in the military for options for a strike on Iran that they all advised him against doing. That was last week. So, we find out about these things later, but the market knows about it before we do. So I think there's plenty of geo risk in crude. I worked the short side on this wave. I never got long. I didn't try and sell retracements. And, between the threat of a military strike and the withdrawal of troops out of Iraq and Afghanistan, I think there's plenty of geo risk that the market at this point may not be pricing in. So I know there are a lot of long-term bears in crude. We're going to have electric vehicles, et cetera, et cetera. But the action in crude is still pretty constructive. This looks like.
Well, yeah. What happens if we just by chance go after Iran? What happens there?
Strait of Hormuz closes. There's a supply shock.
So crude would rip though in that situation.
Yeah.
I mean,
Remember,
right.
I mean, I brought it up a week ago, and it was just based upon, desperate people do desperate things.
Yeah.
And he pulled out of the treaty with Iran. He's had them under sanctions this whole term. The population is suffering. And, that I just thought, he might be irrational enough to do something like that. And then I see a report yesterday that he wanted to know what his options were.
Got it.
The news isn't making a big deal out of it, but it's a big deal.
It is a big deal. Yeah, for sure.
So crude could be $80 if something like that happens, 70, $80. So anyway, don't trade the short side of crude is really my message. Right now.
Talking about that really quick, and I know people are bearish crude. In your words, bearish crude because of electric vehicles. It's a fossil fuel. It's eventually going to disappear. Whatever.
Right.
Whatever the argument is. The one thing about crude oil is not going to. I know it did drop below negative. 6 months ago or whatever it was. But that's not normal, and that was more of a because they just didn't have anywhere to store it. But sorry, Dale, I had to yawn. But for the most part, crude's not going to go to zero, because what will happen is you just constrict supply, and then you constrict supply, and then prices will bounce back up again. Now, do I think that oil producing countries will not make as much money in the future? Yeah, I do believe that. So, but I'm not one person that's going to say, oh, crude's going to go to zero or it's going to go to, $2 and it's just going to trade at $2 forever. I mean, and if it ever does, that's a long ways away. Nowhere near where we're at right now. Right.
Yeah. And, I don't have
my lifetime. I don't think.
Do you have a Tesla?
I don't. You know what? I'm a gas guzzler kind of guy.
Yeah,
I grew up with my father. He rebuilds still to this day. He rebuilds old cars. So
you had an SS 396.
He's got a Camaro with it's got a. I'm trying to think what size.
396 or 427.
Yeah, because it's an SS. I think it's a 427, and then he's got a Ford Fairlane and a two-door Ford Fairlane that's a sleeper car. And Oh,
Yeah.
I mean, the thing you pull up next to it, it's like a rust bucket. And then it actually, minus the interior, you look at the outside and it looks like a rust bucket
Yeah.
with big ass tires and
Mickey
so
Thompson's.
loud. And yeah, so,
Yeah.
little,
Yeah. I grew up in that muscle car era.
but that's a thing right now, right?
Yeah.
That's a thing, like having a sleeper car. So these little hot rod, guys in their Japanese cars pull up next to him, and I think he does a quarter mile in like, I want to say it's like high tens. It's so
Wow.
ridiculous. It's so
Yeah.
fast.
Yeah.
It really, your face feels like it's going to rip off. It's like Tesla fast, but
Yeah.
for an old muscle car, Anyway, I could
Yeah.
go on and on and on and on, which I'm not going to. So,
Okay.
how you doing today there,
Pretty
Dale?
good, buddy. It's kind of quiet
Yeah, it is.
this week.
There. So let's all note that some pretty big news came out this morning, right? This is this came out as soon as I really woke up this morning. Pfizer's vaccine 95% effective in final analysis of big trial. That's big news. That's Scott Gottlieb.
Gottlieb. Yeah.
Yeah, he's like, this could be, between this and the other vaccines, this could be the end of, the pandemic, next year. And hey, this is all really exciting news. And and I've also got to state this, guys, you've made it this far, so just stay safe. I mean, you've literally, wouldn't it suck? I mean, and wouldn't it
I've
just
thought
be,
about what you're going to say.
yeah, wouldn't it be like the worst? Like you're like, yeah, past the, and we're gonna get a vaccine, and then you end up getting sick and
Dying.
or just getting really sick before a vaccine comes out.
Yeah.
Just be safe, be respectful.
Yeah. Why not hibernate for another 3-4
Well,
months?
it's not necessarily.
We've done it 8.
Just be respectful of the disease. Just wear a mask. Wash your hands. Social distance when you can. Have Thanksgiving dinner with 2 people.
Is that what you're doing? Just you and your sons?
No. We have a couple family members coming over, but it's it's going to be a small. We can't do our big normal event because we got. I have a nanny who's 100 years old.
Yeah.
So we can't, it's like it automatically knocks out, a lot. And then a lot of people in our family are in the medical profession and work with COVID patients. So you can't really commingle that.
No, you're actually not supposed to bring in other households because I think they call it like it's like your pod, or I forgot the term. But,
yeah, we have a pod of people that we hang out with, and that's pretty much it. Anyway,
all right,
which includes a couple family members. Hey, real quick before I get into the analysis, I want to say I hope everybody's having a great day and night. It's actually been kind of a slow market, as Dale pointed out. We're seeing a little bit of dollar strength and maybe a little bit of false breakdown in the dollar, which we'll talk about here in a moment. But before I do that, I wanted to mention, if you haven't tried out ForexAnalytix, make sure you do so. It's only $1 for 10 days, and you get the premium version. And if you want to try to get ForexAnalytix for free for a few months, open a Pepperstone account. And you have to be outside of the U.S. or Canada. But if you open a Pepperstone securities account, first of all, they have really stellar customer service. You get handled by an account manager, which is nice. Like in today's day where it's like everything's online and you don't know who you're dealing with. It's nice to actually have an account manager. Anyway, Pepperstone's, they're great because they believe in customer service, and they're one of the bigger FX brokers in the world. So we're happy to partner up with them. Anyway, just want to mention that. Okay, so let's talk about today. So I tweeted this as the chart of the day yesterday, and you made note of it, Dale. As the euro, here's a 4-hour chart that's pretty bearish candle developing, and obviously we're at channel resistance. So let me just make something really clear here. I am a euro bull. I don't know if I'm a euro bull at these levels, but I am a euro bull. So Do I want to be long the euro? Yeah. Do I want to be long the euro at 118.60? I don't think so, because I'm not in the camp that euro is going to 121 right at this moment in time. What I'm hoping happens, and this is me hoping, not trying to expect or anticipate. What I'm hoping happens here is that the euro actually, rejects this channel. We do
Yeah.
this double top or,
Yeah.
breakthrough support here. We start to sell off, and we drop through the support. Everybody thinks, oh, hey, double top, let's short it, and then they get caught on the short side, and then it bounces from like the one, below 117. That's how I'm hoping to play the euro. I'd rather play it on the long side down there, because sorry, I'm yawning. Because I do believe that the euro is going higher over time. I'm also cognizant of the time of year that we're in. We are close to Santa Claus rally timeframe, which would be, sometime in December. Between December. Sometimes it happens right at Christmas, the holiday, and then through Christmas to January 5th or whatever, we see a Santa Claus rally. Sometimes it's the month of December. But this is also can be a tumultuous time in the market right now, like where we're currently at, like this time of year. So we could see a little bit of selling of risk as we head into the Thanksgiving holiday in the beginning of December. And if that's the case, it would be possible for the dollar to strengthen a little bit. And let's think about this. We have this great news coming out. Great news regarding the vaccines, right?
Yeah.
And it's for a long time been in my head that we actually are sell the news on vaccines coming out. And so I think the risk is that the market has already obviously priced in, vaccines coming and a huge recovery into the next year. And we might get a little bit of, sell the news. Do I think that's going to be the end of the world? No. Do I think that, stocks are at risk of maybe, coming back down towards 3,400 before we rally? Yeah, I think that's a reasonable risk. I'm not sure if it's going to happen, but I think it is a risk. So anyway, I just kind of given you guys my thoughts on how I feel.
It was a great inflection point.
What's that?
Chart, the euro.
Yeah, I mean, I think the euro's, whether it rolls over from here or not, or maybe it just breaks out. Remember, we do have the ECB, right? Yeah. And actually, the ECB is next week. Let me double check that. Let me just. I'm 90% sure it's next week. The ECB is no, it's not next week. It's in 2 weeks. Shoot. Oh, you know what? I'm thinking the Fed. The Fed's actually next month. We do have the Fed to deal with. And I do think that the Fed is going to provide additional liquidity, and that's going to be in December. That's what I was thinking. And so that might be the catalyst that drives the euro higher. You know what I mean? Because if you listen to Jay Powell yesterday, and he was doing a speech for San Francisco Bay Club something or other, I forget exactly what club he was talking to. Anyway, he said, hey, we have a lot of work to do, and there's not, basically saying without fiscal response, we still have a lot of work to do, which is basically saying that they're going to continue to provide the market with ample liquidity, which maybe puts next month in December in play as far as the FOMC goes. And Scott just said that December 10th is the ECB. Yeah, so I mean, we got two central banks, which I think that the Fed could be the catalyst that actually drives the euro higher if the Fed says, we're stepping up our our plan as far as quantitative easing or continued bond buying. So anyway, it was just kind of my thoughts. So as of today, I think we have to watch 119. I think the euro is 119 resistance is going to be big. Okay. We are in a range for now. Support intraday. Let's talk intraday support. I mean, let's just, I'll just draw this out real quick. So 618 comes in at 118. So I'm just going to write down 118 as being intraday support. I don't think we get to it. We might, if the euro really starts coming down, we might reach 118.10. The euro is trading a little heavy here, and as Dale pointed out, this is a bearish 4-hour candle it's setting up. We've got 30 minutes left, so we could set up a nice, this would be dark cloud cover. I could see the next candle developing like a bearish candle developing and pushing us lower. It's possible. Obviously, we need some help with equities. So, and I don't know if we're going to get that, but we'll see. Anyway, cable. So everybody's expecting a Brexit deal next week. Great. So is this going to be the ultimate buy the rumor, sell the news event of our lifetime? I think now that we all know that there's a Brexit deal, we kind of knew there's a Brexit deal, and if listening to Stelios, he's always going to tell you there's been a Brexit deal coming no matter what, because it's best for all parties. Yeah, so that's happening.
Is it really? We got something firm.
Huh? No, well, everybody says next week more than likely.
I think if it happens, cable is going to 140 next week.
You think so?
I think so, yeah.
Oh, then I think I need to sell it up there. I think I'm going to be the buy the rumor, sell the news. We get a deal, it spikes up, I'm going to sell into strength. I think that's what I'm going to do.
Yeah, so, that makes sense.
But could we spike into like this 135 level, 136, bunch of resistance up here? Yeah, I do think that that's a risk. Intraday though, for today, unless we get some sort of Brexit news intraday, I think we just need to pay attention to the 133, 133 resistance, which is basically 133.10. And support. Support would be right through here. This is intraday support. So, and it's not just here. It stretches all the way back, by the way, to these levels. 132.30. Euro is really coming under a little bit of pressure here. Aussie. So the Aussie dollar, the Aussie, we've noted this 73.40 level. I think we've written it down as resistance a lot, and that's obviously an issue. So why is the euro under pressure? Other than, I'm short and I'm happy about it, but I'm just wondering why the euro is coming down. Don't know. I don't know, Fred. I don't know. But what I'm going to do is I'm going to take a little bit of profits there in my euro. I took half of my profits off the table. I was short from 70. Hold on. Typing in the chat room, guys. So if you're in the chat room, you saw that. That's where my priorities lie, or in the chat room for the ForexAnalytix customers. So if you want to know where I'm at all day, there's the, let's see. Shorted the euro. This is all this morning. short of the euro at 173.73. So, or 118.73. Okay. So anyway, I've covered a little bit down here. US dollar Norwegian krona is breaking out a little bit. Yeah. So anyway, what was I doing? Okay, back to the charts. You see how much chatting we do in that ForexAnalytix chat room. I mean, that was literally, I mean, this is, you guys are, I mean, that was from all this morning. This is before I got up around here, around here, around here. That's all from the last 3 hours on a slow day. So yeah, if you guys want to be part of the ForexAnalytix chat room, that's where you're going to find me all day. And Amanda and Polly and Stelios is in there a lot. Steve has been working on other projects, but he's usually in there too. You know, so anyway. Okay.
Back in a minute, Blake.
And what?
I'll be back in a minute.
Okay. So Aussie 73.40. We've been writing that down as resistance. Support is 72.40. Let's see. So 73.40, 72.40. And Kiwi is still bullish, guys. So not the Aussie, the Kiwi. But you guys see this little, this here? It's because I was warning the ForexAnalytix traders earlier that if we break back below 69 cents, that's going to be a false breakout. And it's possible because all the relative strength is divergent. Do I think that it's bearish? No, but do I think that we could sell off and come back down to 68.25, maybe 68 cents? Yeah, I do. So especially if you look how the euro's acting today. All right, so resistance right now is 69.30 because those are the highs basically. But you got to watch the Kiwi. If the Kiwi drops back below the 69 cent level, you know, we're going to see a little bit of profit taking. Dollar Canadian. We picked up the dollar Canadian at Amanda did, and I did, and Gator did, Michael. And I know probably a few other people in the chat room. The dollar Canadian almost hit the 50% retracement. We got a little false breakdown here intraday. So support, I believe, is going to be intraday at 130.50. Okay. And resistance would be right here because this is yesterday's highs, 131. Not yesterday's highs, the overnight highs, 131.15 and then 131.75. So I'm going to write down those, both of those numbers, because I think we could at least trade back up to 131.15. Okay. We are in a range. Dollar Mexican peso. So we are, you know, there last night in Asia, I was making dinner for the family. I was barbecuing some chicken. And because my wife had taken my son to soccer practice, so I stayed home and I told people in the chat room, hey, I'll be kind of in and out. You know, I was actually waiting for a handyman to come over to the house to help me install a sink. But anyway, not a sink, a faucet, a new faucet, because the line broke. Anyway, there's neither here nor there. As I was sitting there. You know, one of our traders last night, it's like, hey, you know, I'm thinking about buying, or I bought some dollar Mexican peso, or I'm thinking about buying dollar Mexican peso. And it was in the 30s at 2030 or 2031. He's like, what do you think? And I'm like, you know what? I'd rather buy it near 2020, near the 78% retracement. And so hopefully he listened last night, because it dipped to a low of 2017 and now we are at 2027. So this 20 right now, 2015 is going to be support. We are making a higher low, and that's important to note. Okay. I still think 2085 is really key. And then obviously 20.03. Oops. I do it this way.
Not that anybody cares, Blake, but we got housing data.
We did?
Yeah, we just did. Nothing to write home about, like, more or less as expected.
Okay, and let's realize that housing has been extremely strong, and where I live, it's so crazy. It's like I think a lot of this demand is a couple. There's a few reasons why housing is so strong right now. Especially in like certain parts, like we're bonkers right now. People are moving in from Los Angeles like it's nobody's business into where I live. And the same with like the outskirts of New York. A lot of these big city centers have just lost a lot of people. But you've got two things that are really fueling this move higher in homes. You got ultra low rates. I mean, when you can get a 30-year home loan with less sub 3%. APR. I mean, that's ridiculous.
So basically, they pay you to get a loan.
I mean, really. I mean, it's
because
like
let's
really...
be honest. I mean, inflation, real inflation, not how it's measured.
Yeah,
I'm pretty sure is at least there. And looking forward into the future, since we're talking about a 30-year loan, I'm pretty sure that the average inflation for the 30-year period, the true one, is going to be way above that.
Yeah, so I mean, you got ridiculously low rates, and then you have people that are working from home now, and so, I think if you're long residential, short commercial, you're doing great.
Yeah.
And so, I think that's what's keeping up the housing market anyway.
Commercial real estate is a massacre. I mean, it's
yeah, and
I mean,
New
it's
York...
the perfect storm. Between anyhow the advancement of technology and all the Amazons, etc. Now they got COVID, and more or less it was like an acceleration towards the future.
Yeah. I mean, it's crazy, right? And it's
add to the mix oversupply, because there was a lot of commercial real estate that was in the pipeline during the past few decades. So yeah, I think it looks really bad.
It does. All right, let me finish this up real quick, Steve. This is US dollar, Norwegian krone. Shoot. Sorry, kids. I just did the Swissy. Swissy hasn't changed a whole lot. US dollar, Norwegian krone, we might be forming a higher low. So think about that. 9.10. This is just intraday stuff. It's still sideways, but whoops, 9. We are still range bound. Dollar Swiss range bound. Dollar yen. Dollar yen. We found support yesterday at the 618. And I played it for 10, 12 pips, I think, yesterday. Super exciting. Not. So it looks like the 78% retracement is going to offer some support down here again. Is it going to be a game changer? Probably not, but you never know. I really have not been trading the dollar yen much. Whenever we approach a 618 retracement, it's like, okay, well, that I could do that, and played it for 12 pips. Got out of it and just continued on with my day. So dollar yen, 103.70 may offer some support. Resistance today, intraday. And you guys know I've been putting some wider support and resistance levels on, but since ranges have been kind of tight the last couple of days, I'm trying to get it a little bit more narrow for you all. Which I hope you can appreciate a little bit, because we're just not seeing a whole lot. That's messy. Okay, so I mean, it's tough. I'm still just gonna write 105. I think that, 105 is resistance intraday. So I know it's far away, but hey, you never know. We can spike. We've spiked. We can spike. Dollar index. Okay, so support. Again, here's our big range. You guys know that big range that we have, right? $92.10, $93.10. Let's just keep it at that. So do you guys know why we put together our bias chart every day? And I'm still going to do gold and silver and S&Ps, but the reason why you do this bias chart every day is not to tell you, oh, I need to buy it at 118, or I need to sell it at 119, or I need to buy, the cable if it breaks 133.10. Not necessarily. The reason why we write down the bias chart numbers is because we want to know that there's a key, we're approaching a key level or we're at a key level in a currency pair, because usually you can make a decision around that price. So, a lot of times you'll see me put like, for example, like here's a great example. Actually, I needed to put asterisks. I put asterisks next to 68 cents because I know that the Kiwi dollar is very bullish while above 68 cents. Now, if we ever break that, then I'm almost going to turn instantly bearish. So, because it's such a key level. And if we approach it the next time we get to 68 cents and it looks like it's going to bounce, I'm buying it because I know there's limited risk. I could buy it and put my stops at 67.82 and be on the long side with very manageable risks. So those are just different. The reason why we do support and resistance like this is to give you a real quick overview. Okay, hey, here's a currency pair, or here's an instrument. We're getting close to support, and it's bullish for now. So we're getting close to support, or to know that we are range bound environment. And it sure does help when you look at I've been doing bias charts ever since I used to call them T charts. Ever since I used to trade equities in the mid 90s, I would come to the office every day and I'd say, okay, well, here's all my semiconductor stocks. Here's Applied Materials. Here's Maxim Integrated Technologies. Here's LLTC. I'm gonna put them on my bias chart and say, my T chart, and say, okay, Maxim's bullish. Here's resistance. It's at 24.65. So that's how it all originated for me. And that's hold on really quick.
Helps a lot with discipline as well.
Yeah.
Stops
So we
you from
do it every morning. I just sold my dollar Canadian. Oh, dude, I thought I was writing it. I guess. Well. Okay, I did write it. Okay, so I just scalped out of the dollar Canadian because we were picking it up at 65. So, okay, what am I doing now? Finishing up. Okay, so let's go over to S&Ps. So S&P is pretty easy right now. 3640, and again, 3600. But I'm really, see this pink line, and you notice I have an alarm at it. It's at 3580. So that's really what I think is key. That S&P needs to hold above 3580, and while we're above it, we can be bullish because it's just it is. But I am going to warn you guys: buy the rumor, sell the news is a thing. It can happen. And I wouldn't be surprised if we rolled over today. Now that we got all the great news out of the way, right? Just think about that. Okay. Gold's almost pooped the bed this morning, and then it stopped. So it must be wearing depends. 1850. You can see this like bear flag developing, but you guys know that 1838 is really important support because it is the 38% retracement long-term 38% retracement. So this is really, really key support here. All right. 1838, 1850, and then resistance is 19. Well, now we yesterday we wrote down 1910, which is the 50% retracement. So we'll just write down 1900 again because we are definitely stalling up there. Okay, that's it. So your bias chart is finished. Okay. Steve, Stelios, it's all yours. I'm done.
You're done?
Good morning. Thank you.
Good morning.
You're
Finished.
done? I
Good
thought you're
morning.
Blake.
I'm done. D-U-N. Spelled with a D-U-N.
Lieutenant done.
Done.
Lieutenant Dan.
Done. D-U-N-N. All right, guys. Well, anyway, I hope you guys all have a great trading session. I'm done speaking. I'm gonna turn it over to Steve and Stelios. So thank you guys for all the support. Appreciate you tuning in every day. And when you see us on Twitter about this webinar, if you see us on social media, retweet it, share it with your friends, please. It helps us. We don't ask for a lot from you guys. It's free every day for years and years and years. So just, help us out. Appreciate it. Thanks. It's all yours, guys.
Blake, good luck
Blake.
today.
Thanks.
Thank you,
too.
Blake.
Thanks, guys. So I was actually surprised. Blake said there's a deal, the Brexit deal done happening next week. I still think it's happening, but I do think that either way, the pound's going to move. There is a deal. I think.
For sure.
Yeah. I don't think it's priced in one way or another massively. So, I always thought it was around 50-50. I think we're probably pricing a little bit more than 50% chance now. But I think if we do get a deal, any kind of deal, cable goes to 140. Do you sell it there? That's a good question, probably. But, and obviously, if we don't get a deal, if we get a hard Brexit, cable goes down, who knows where, probably going to test those lows from, what was it, March. But we have nothing yet. We're still waiting. Apparently, there can be a deal made until the 31st of December.
Didn't I tell you yesterday that I think we're going to have Christmas
yeah.
with Brexit?
You're right. Anyway, enough on that front. Otherwise, Donald Trump is still trying to fight the elections. He fired the head of, what was it, the Cybersecurity and Infrastructure Agency, who basically had contradicted the Trump's claims that there was election fraud. So he's gone. Anyway, he's going to try and stay in power somehow. I think the market is still thinking that one way or another is going to be over, and there's going to be a transfer of power. And so on that front, we have to wait as well, same as Brexit. And otherwise, we had some data today worth mentioning for sure. UK CPI, 0.7% year on year, up from 0.5%, better than expected. So that's slowly creeping up as oil is increasing, as activity is coming back slowly after this the massive disaster basically due to COVID. Eurozone inflation, however, minus 0.3% year on year, steady there. It's been there for 3 or 4 readings now. And this is really, I mean, I don't have to tell you, this is not good.
This is really great if you ask me, but okay.
Well, yes, I'm talking on the side of, from the point of view of central banks, yeah. Otherwise, yeah, seeing things cost 0.3 less every year, yeah, that's not bad, not a bad thing. And
I wish it could continue in perpetuity.
People keep, whenever I have a conversation, people saying, look, inflation, why should it be 2%? There's no bad thing with it being minus 1%. And people will usually say, but, you have the danger of spiraling deflation. And, yes, this was the case decades ago, but look at money supply, where it's going. There is not going to ever be spiraling deflation. Anybody, in my opinion, obviously, but I think anybody who thinks otherwise really needs to check some basic economics and mathematics.
Yeah, actually, that's one of the reasons why we don't have more deflation, which would be much better, because what central banks don't say, and some people don't seem to understand, or they don't think about it to understand, is that technological progress is by default deflationary.
Of course.
which is great. I mean, that's great, actually. This is one of the reasons we've progressed so much and our standard of living increased so much in the past decades, right? Because you find, you research something, you start manufacturing it, and the more economies of scale you have and the more technology progresses, you can build it cheaper and cheaper and cheaper. I mean,
Yeah.
I remember the first laptop I bought in the 90s cost back then the equivalent of today is like 3,000 euros, because we didn't have the euro back then, but adjusted for inflation, imagine 3,000 euros adjusted for like 20 something years of inflation. I assume today's price would be something like 5,000 euros. And now you can buy a laptop that's like, I don't know, 500 times better at 600 euros.
Same with all electronics, really. So yes, you're absolutely right. Technological advance is deflationary for sure.
And cheap labor was a big part of it too, right?
Yeah, globalization in
Offshoring,
essence.
yeah.
Globalization which brought cheap labor. Correct.
But
yes.
you know how it works. The humanity and businesses will always try to find the cheapest place in the world to manufacture stuff. When something becomes more expensive, like China has now become more expensive, they're going to find another place. So that's how.
Which is also great, because it's the concept of competitive advantage, right?
Exactly. And
everybody wins this way. I mean, this is the way, in essence, capitalism works.
Yeah, and the less you interfere with free markets, the better it is for the end user and end consumer. End of story.
Absolutely.
Yes. So what else to say? Okay, we had Pfizer, who's now saying it's 95% effective.
Yeah,
so
because
that beats 94 point something.
94, yeah.
So now we're waiting for the next 96%, and probably the Russian is going to say 102%, and that will be it.
Yeah.
Or
for 100 people that get vaccinated, 2 more get immunity to COVID.
But yeah, I mean, this is obviously good news. But as I said yesterday and the day before, I just want to see some more information. We want to see how this thing gets rolled out. Who here wants to be the first to take the vaccine?
I will.
Okay, yeah. Sansi says,
I've had a good run.
Immunity by association. That's a good one.
Yeah.
That's really good. Yeah. Otherwise, today's market's a little bit mixed. Risk is trying to rally.
Only because of what Steve said would happen.
About what? The extra. I didn't say that yesterday.
Yeah, you did too.
Somebody else mentioned.
Oh, okay.
Otherwise, market-wise, I wrote this on the chat room earlier. I'm lowering my stops on my short Euro Norway. I keep doing this every day now. It's going well, so I'm lowering my stops there. I think
I'm also short Euro NOK. Unfortunately, oppositely from USD NOK, I never added here. So, but yeah, still looks good, I think, Stelja.
Yeah. And it's been a good run. And if I get taken out, it's okay. I'm still going to be looking to sell more Euro Norway and Dollar Norway. It's just a trade I want to do over and over again. And I have been doing over the past, 3 years. Any big spike, I just sell into it. And I'm waiting for silver. Otherwise, I have nothing in stocks or equities. I'm not short, I'm not long. And I'm just waiting to see price action evolve.
Silver has gone a little bit in hibernation in this range. I mean, it's been coiling and coiling and coiling.
I think the big range is really 1920 to 26. That's the big range. That's the one I'll be playing.
Yeah, I agree with you. In essence, this channel.
Yes. And if it means sitting on my hands and doing nothing for a while, hey, we have to do that too.
That's a pro move.
Well, when you've been burned,
that's how you become a pro.
Yes.
I'm salivating in the idea that we might see silver back to 19. That's going to be amazing.
Oh yeah.
All right, don't turn your camera on.
Anyway, so that's pretty much it from me, my friends.
Okay, perfect, Stel.
Thank you.
Thanks, Stel.
As he said, Dale, today has been rather, a quiet day. Yesterday was more or less a quiet day as well.
Yeah, the whole week pretty much, except for that, vaccine news Monday.
So far, yes. And the vaccine news, if you think about it, they caused like a spike that failed to produce any real
Yeah.
follow through so far.
Yeah.
On the other hand, we haven't reversed that, but we haven't seen any follow through yet.
Right.
In any case, starting from what moves the market most, including the forex markets lately, I'd have to say that's more or less risk. And having to do with risk, I think that nothing has changed here. The big picture is I still think there is a high probability that this was a symmetrical triangle. We've broken above it. We came down. We retested it. And the next upside resistance is the 127% extension of the triangle at 36.92. And there's nothing more to say about it. I think that as long as we trade above this triangle's broken trend line resistance, the path of least resistance definitely remains higher. For the same reasons, the path of least resistance for the dollar remains lower. I mean, it's more than clear that we've spent, quite a significant period. I mean, from the beginning of August and now we're in the middle of November, in more or less consolidating, made a little attempt of rebounding there, which was, a failure, obviously. I mean, I see nothing here in this price action that tells me that dollar should move higher. I think the next move is lower in any case. So in the medium term, at least, what I see is high risk, lower dollar. Of course, nothing necessarily moves in a straight line, but that's what the charts tell me at the moment. And to be honest, logic also says the same. I mean, the market is still functioning in the mode that, okay, one way or another, we're going to have a transfer of power. And once that happens, we're going to get, guess what? More stimulus. More stimulus should have that effect in any case. Now, having to do with gold and silver, there's really nothing to add that we haven't talked about, yesterday, the day before, last week. Yesterday, we had a nice conversation with Greg about it. He believes that there is a good chance that we're going to see, one more leg lower, which is the case towards 1800, which can easily happen. But, what we both agree on is that happens or doesn't happen, the next big move for gold comes to the upside most likely, as in the case of silver. 23 is supporting silver. There is a scenario under which we can move much lower towards 19, but in any case, as I said, that's a dream case scenario for me. If you ask me, I don't think we're going to get that lucky, but whatever. Now, having to do with crude oil seems to be remaining well bid. Now it might need to consolidate a little bit more here than a few days, and I assume we're going to see more upside having to do with natural gas, because people are asking. So far the move lower has been orderly, and I like the fact that it holds within that channel. I expected that we're going to see another leg lower, and once I saw the type of rebound we got from like the 290 area, and we talked about it here. Um, we found support once again in this channel, and that's quite interesting if you ask me. So I'm really monitoring to see what's going to happen here. In my opinion, a breakthrough 290 once again is going to be a confirmation that the move was corrective and we're headed much higher once again. In that case, I would be looking next for a move towards 375. So monitoring this channel, as long as we stay within it, there's no obvious reason to be long. But on the other hand, as I said, I suspect that sooner rather than later, it's going to break out and resume to the upside. So for me, that's going to be the trigger. Now, somebody mentions here that natural gas is near the 200 daily moving average. It depends on which chart you're looking. In this case, my 200 DMA is a lot lower. It's the 50 DMA that it's been testing here. But for me, a lot more important than the 50 DMA is the descending channel. I don't trade so much based on moving averages. I just keep two moving averages, a faster one and a slower one. because it's a very, very easy way to determine what's happening with the trend, right? Seeing the difference in momentum in the short term to the longer term. So, that's what I think about it. Somebody's asking for the IWM, the Russell, that is, which, there it is. So the IWM has finally produced an all-time high, right? And that is definitely a bullish development. And, we talked about that the other day. We talked about the change, the likely change that might come in momentum, which we haven't confirmed yet. For me, the better indicator here is the Nasdaq to the S&P ratio, which, as you see, hasn't broken down yet. For me, breaking down would be breaking through this potential neckline of the head and shoulders formation, which we haven't done yet, right? So, having said that, the Russell has broken to new highs, and that's definitely a bullish development. Now we have left a gap here at, what is it, 165.60, more or less. I think as long as we're above that unfilled gap, it looks bullish. And next upside targets, we fib extend this, 191 more or less is the next upside target, the 1.7% extension of this pullback. So that's all you need to know about the Russell, I think, from a technical perspective. You said weekly DMA. No, I don't pay attention to those. I don't think they matter, really. Somebody's asking about the cable. Listen, about the cable, in my opinion, things are quite clear here. I'm still monitoring this channel. I think it is significant. I mean, we've tested it multiple times and it seems to be working. I think the way we've rebounded so far is not impulsive. And of course, technical analysis is not a method to predict political outcomes, right, or fundamentals. I think that it would definitely suit the technical picture here, some kind of a negative development in the Brexit front, because from a technical perspective, I definitely like the cable moving lower from here a lot more than the opposite. Okay. So 133.10 is resistance. And from a risk reward perspective, against this trend line resistance, I think it makes sense to be short, right? I don't have a position here and I'm not looking to have one at the moment because I think there are better things to trade out there as we speak. But that's what I think about this. Now, Euro pound, it's one pair I talked about at the end of last week, and we revisited yesterday with Grega, and I do think it looks very interesting. I mean, against last week's low at 88, what is it, 88.60 or whatever, I think that it looks really nice and constructive as long as we break through this channel once again. This channel currently passes from 90.20, 90.30 or something like that. So this is one I would be probably interested in buying if we break through that. I think we can see an extension towards 93 cents, 94 cents perhaps, if that happens. So, in the to-do list, in my watch list for sure. I mean, I keep an eye on it on a daily basis, and it also gives you the ability that, that you can take a trade that's completely decoupled from risk assets, the dollar, so on and so forth. And sometimes it's nice having exposure to these pairs as well. For example, another example of that is the Aussie Kiwi. I mean, a pair that gives you that type of an ability, which coincidentally or not, probably coincidentally, it looks a lot like the Euro pound. I mean, it's moved lower in a channel that, looks corrective in nature, right? It has come very close to retesting the previous low, exactly as the Euro pound did. So, Aussie Kiwi from a risk reward perspective doesn't look bad to the long side as, either. I mean, both of them look rather appealing to the long side, at least from a risk reward perspective. It seems to make sense. Now, keep in mind, I'm also monitoring this long-term descending trend line there in the Aussie Kiwi. I think if we break above it, we might see a lot more upside in the Aussie Kiwi, but that's not something to discuss today because we're not there yet. And usually this is a pair that does not move fast. Usually it's a slow mover, right? Nifty monthly RSI showing divergence since 2008. Yeah, you know something. The problem is when you're looking at a monthly chart, RSI can be diverging literally for years. So RSI divergences are not a timely indicator, especially when you're looking at time frames like that. So bottom line, you know, just forget about trying to trade on divergences noticed on momentum indicators on so long-term charts. Okay, that's my advice there. At some point, from experience, I'm telling you, at some point it's going to play out. But you know, you definitely can't trade on that, right? You need to have a lot more stuff you're looking at that will give you a better trigger to go in a trade or not.
Yeah, the
Now,
minimum drill down time frames from there.
yes, exactly. Now, if you want a shorter term idea about the Nifty is clearly bullish. I mean, it produced that bull flag there. It has broken out from it. Next upside resistance is the 127% extension, as we saw with Russell at 13,770, whatever it is. So Nifty looks really bullish at the moment, right? There is no argument there. And this previous high at 12,300 and 430, whatever it was, should act as support from this point on. Dale, I have a meeting. Do we have your interview
Yes.
here? Okay,
Yeah, Jake from Trunk Spider is in the house.
perfect.
Okay. All right, Steve, thanks.
Thank you.
All right, Jake, I'm going to get you set up now, buddy. Hi, Jake. Welcome back to Face.
Hello, hello. Jake is in the house.
Yeah, how are you, buddy? How have you been?
I'm doing good, doing good. Busy, but good.
Did you like my promo to see if there were any raindrops on your
Precipitation?
charts? It might cause some precipitation.
I did see that.
Okay.
We will talk about some raindrops, but also
Okay.
a couple other things I found interesting last night. So
Okay.
yeah, I'm ready to go.
All right, so share your screen, my trading warrior brother, and we could take a look. Okay.
Alrighty, can you see it?
Yeah, we have those circles on the S&Ps.
Perfect. And what do you think those circles are?
I think that there's some type of resistance points for big breaks, because every one of them produced a decline. So is that what you're implying up here?
Yeah, so, well, first of all, anything can happen in the markets. This is just more of an
Yeah.
observation. But what I've done here is I've just overlaid the monthly Bollinger Band onto the daily chart. So these are daily candles with the monthly Bollinger Band overlaid on top of them. And what's pretty interesting, that's happened actually multiple times this year, and it actually doesn't happen that often in previous years, is anytime we start to melt up with this daily candle through this longer term band, in this case, the monthly band, we do have a pullback. Now, I mention this often when I do this type of analysis is, the Bollinger Bands are flexible. They can move with price, but you can see here, every time we have melted up above that upper band, there has been some type of small pullback, or sometimes small, sometimes absolutely massive. Like we had in February.
Right.
And so it's interesting to see that we are at this area again. As I mentioned, it's very easy once we close for the month of November that this band can just continue to move up with price. However, even if we did continue this slope here from October, we're still going to be pretty either out a little outside the band or right at it. So it is worth noting. This doesn't mean that I'm, mega short or anything. You can see what happened here, that we did have a melt up, a little pullback to that lower band, and then we're right back up. So
Can I ask you something, Jake, as far as it being actionable? And I notice a lot of these things happen with technical formations too, like wedges, and to me these look like throwovers on the bands. And is it, do you have to wait for it to be actionable to get back inside the band? Is that the signal? Or do you
I mean,
take trades before, anticipating that it'll come back inside the band?
so in this case, I don't know if I would short this. I think it's, for me, kind of a sign to maybe start cutting off a little exposure to the broad markets.
Okay.
It's not a signal that I would just absolutely, go mortgage the house and go short. But for me personally, everyone's got their own style. This is where I would start to look for divergences. And I've brought up the Williams percent range multiple times in previous videos, but essentially this is what I'd be looking for is we have, these higher highs here, and we don't really have any divergence on the percent range. Now we are on the 12. I don't really like to use the Williams percent range 12 on the daily chart. I'd more likely use the 5, since there's 5 trading days in a year, and you can't see any divergence. So that's definitely something to keep in mind too. If this was something I'd be looking for a bigger move down, I'd be looking for divergence. But then again, you didn't really have divergence any other times when we were outside this band. So it's kind of a hard one.
Can you explain to viewers what Williams percentage is?
Yeah, so it's essentially a highly sensitive RSI that takes into account the extreme highs and lows between X amount of time. So in this case, it's 5 trading days, since we're on the daily candle. It's something I like to use over the RSI because it does capture divergences before that, and that's kind of why it was created, for that reason, mostly for divergences. So this is something I kind of pull out on these extremes, whether that's an extreme to the downside. So you can see here, we were way outside this lower band, right? We were hitting lower lows on price, but we were hitting higher lows on the percent range on the 5. So that's kind of how I use it. Generally you have to wait for some type of confirmation, but that's kind of based on whatever trader. Sometimes I'll pull out just the overall, the monthly bands. And this has worked multiple times in the last 3 months. August definitely was heeding caution as we just continued to melt up. October was a little bit of an early one where we kind of just barely poked out of it and then pulled back. But now we've had multiple times where price action is traded above this area. So it's worth a note. Like I said, I'm not massively bearish or anything here, but sometimes you just got to take what the price action's telling you. And so that's kind of where that comes from. I know you mentioned the raindrops, and that's what I want to bring up next is, at least from yesterday, the way I like to use the raindrops is really comparing the hollow candle versus the raindrop. So you can see here, if I just split the screen, we've got the hollow candle on the left, we've got the raindrop here on the right. And what I like to do is look for these discrepancies within the wick of a regular candle or hollow candle, whatever type of candle you use. And you'll see here, really any time that you have a wick like this, but you have volume within that wick, it's generally a sign that there's conviction by buyers. Even though we have a little bit of a wick there on the daily chart, I'm more focused on where's that volume within the range. And that's what the raindrop is telling us is, where is that volume? So you can see here kind of another really close example to what we saw yesterday. This candle right here, almost the same type of hollow candle. It was a hollow red candle. That means that we closed below the previous day, but we did close higher than we opened, hence the hollow part of the candle. And you can see, same thing. We had this wick, but we had a lot of volume within that wick. So that's something to keep in mind.
What a different picture, just having the raindrops compared to just having the candle. There's no message on the left as much as there is a message on the right.
Well, exactly. And even if you had the volume bars, I mean, the volume bars are just telling you an aggregate amount of volume that happened for the day. It's not telling you where that volume was located. It's not telling you at what price it was located. So being able to use the raindrop on the daily chart will essentially tell us the volume profile for the first and the second half of the day, without having to go into that 2-minute chart or that 1-minute chart or 5-minute chart and look for those volume bars and where that was located at a specific price level. The raindrop is just telling you all of that pretty much right off the bat. One, if we wanted to kind of talk about a potential actionable trade idea today, this is one that already kind of has made its breakout yesterday, but I think it's got plenty of room left, is MJ, the marijuana ETF. For the same reason, right? We've got this previous area of resistance. I generally like to make my support and resistance areas double lines because they're zones rather than just a precise area. But you can see here, we broke out of this ascending triangle. We have a lot of volume at the top of the range, and pre-market's already decently up. So this is one that I would definitely look at. Generally, if I'm going to look at an upside kind of area of interest for sellers to come in or just supply to hit the market, I like to anchor a VWAP. So you can see here that we are from this swing high VWAP on November 9th, we're going to be kind of right at it at open. So that's something to definitely consider. Essentially, the anchored VWAP is just being able to say, what's the volume weighted average price from an important area, whether that's a swing high, swing low, really just getting the idea of where the equilibrium price is relative to the last important move. So this would be an area that we'd want to clear before we really start to pick up. But, this one, MJ, is an interesting one with the raindrop side of things. Cron, this is another one that's kind of setting up. Same type of thing. You can see here we've got these previous highs. We just put a horizontal resistance line right at these highs. You can see there was volume above that resistance line yesterday. Another thing that I use is something I kind of coined the volume shelf. It's kind of a fancy term for the point of control, but it's more than just the point of control. It's more or less a group of volume nodes. So you can see here, we have the anchored VWAP from this swing low. We also anchor the volume by price from this swing low. And you can see how price is really starting to catch a bid at this area, as well as this volume shelf. And the volume shelf is essentially showing where a majority of shares are have been bought and sold since we bottomed here on October 30th. So it essentially tells us that a majority of people are holding at break even right around this 720, 725 area. And what happens is price is generally able to move off of these areas, kind of like a launch pad, because it's really a supply and demand thing. If everybody's holding at break even and there's some type of catalyst that sparks demand at all, and people stop selling because they're at break even, this creates that launch pad effect. And I've seen it so many times over the last couple months. Just, this setup is kind of gold for that type of thing. And the same thing, right? If we look at the candle yesterday, you can see we have this wick. But within that wick, there's quite a bit of volume when you look at the raindrop here. So something to consider. Wanted to bring something potentially actionable into today rather than just talk theory on raindrops. But I wanted to also apply the logic and the overall way of thinking to apply that to a real life trade. So that's something definitely to keep an eye on. And then the one thing to be a little hesitant of is the broader markets. But the broader markets, as I mentioned, with the monthly Bollinger Band, the monthly Bollinger Band can continue just to move kind of up with price. It's something that's very flexible. It's not like it's not like an RSI where it's over 80, we have to take caution or maybe pull back. The Bollinger Band, the upper band or the lower band, can just move with price over time. So that's something to keep in mind too.
Can I ask you, Jake, about what's been happening in the markets, depending upon vaccine and COVID shutdowns? There's been this rotation for a few months now, kind of away from FANG and MAGA and into unloved groups like oil and banks and cyclicals, industrials. And really, it hasn't changed, even though, we've had some vaccine news. That's great news here. Do you think that some people think that it's because of COVID that people will rotate back into the stay-at-home issues. Do you have a view on that?
Yeah, I do. For me, I am kind of looking at where was price before COVID, and it's just hard for me to see those types of moves that happened in Zoom and some of these other stocks to be sustainable. I.e., we could have a lockdown for another year, and I think that was already priced into some of these stocks. So I think a lot of people forget that, sometimes things are already priced in. I have Macy's up right now. This is one that I've been that I got in the mid 7s simply because it was just so beaten down. Macy's is essentially priced like it's going to go bankrupt. Maybe it will.
Right.
It's not.
Yeah.
It's not what I'd call a poster child of a company, but it's also inefficiently priced, I think, here. And you can see that. I don't use lower indicators a lot. Like I said, I'll use the percent range when I am looking for something that's overextended. I like to use the vortex indicator as well, just for trend. And then I will throw up the Williams percent range here as well, but I'll need to pull this back to make this 12.
Yeah,
just because.
on the verge of a MACD cross too.
Yep.
Right.
So
there.
this is kind of what I like to use. So I like to use.
Wow, look
and
at
like
that volume that came in. Was that on the red candle at the lows or coming out of the hole?
Yeah, so look at that. So
Yeah.
what I'm doing is I'm starting the volume by price from this July 2018 high, and you can see, look at how much volume is came in at this
Massive.
area. So,
was
just
that
from a
liquidation on the red candle, or did
Probably.
that come in? Or okay, so that was like a capitulation day.
Well, this is a monthly candle, so this
okay,
has happened.
capitulation month. Yeah.
Yeah, so this has happened though over the last 6 months. Once we capitulated, I doubt there was this much volume here. But this is kind of the thing I'm looking at. One, we have all these oscillators, so I'll kind of go over these real quick. So Williams percent range, I have it circled here because we're finally starting to break out of the of this lower threshold around -80. But you also have to tie that with this MACD cross. So anytime the MACD cross is kind of your leader, and then you can see every time that happened, the Williams percent range starts to tick up, the vortex starts to converge. So the vortex is kind of an indicator that was based on just water vortices. So essentially when these big moves start to switch over, this will catch the trend kind of changing. So anytime the red is above the blue and then the red starts to converge and cross through the blue, is when things get interesting. And you'll see here a lot of the time, this is maybe a month or two lagging the MACD cross. So it's nice to use in conjunction with the MACD, but then you always want to use some type of oscillator like the RSI or percent range, just to get an idea to see how things are ramping up. In this case, it's doing exactly what it did the previous times. And like I said, Macy's is not what I'd call a poster child company. It's kind of a crap company, but Riot just went up how much percent in the last couple days, and Riot is about the crappiest company I've ever heard of in my life. So
got the Bitcoin fever.
Yeah,
right?
Exactly. And I think this is just the vaccine fever. People, and the thing about Macy's is it's a big enough company where I think it is still a relatively big online retailer as well. The thing I also want to point out here on top of this oscillator signal that I'm kind of seeing on the MACD vortex and the percent range is the fact that we're kind of getting into what I call a volume gap above, where there's not a lot of liquidity above, and this is something I saw on Marathon Oil a couple weeks ago before we moved up. So if we go to MRO, this is another one that I wouldn't say is the best company in the world, but if we go on the weekly chart, you'll see the same thing happen, right? So we had this. So what I like to do is I'll anchor it from this high here, and you'll see what happened, right? We had a ton of volume here, almost identical to Macy's. We had this volume gap, just not a lot of liquidity here, not a lot of buying and selling action in this price level. And you can see what happens. Price is able to move through it incredibly fast because you don't have a lot of friction. And so on top of that, we're now entering this next level, and I'm going to call this a break-even supply level, because this is essentially, all of these people were holding at a loss for quite some time. When we hit the high threes, these shares here at 550 to 590 were holding quite the drawdown. So now as the price gets back to this area, these shares are now back to break even. And naturally, some people are going to break even and just sell and move on. So that's where you kind of get what I call break even supply, because it's initially likely going to act as a supply zone, but then you're definitely probably going to have some consolidation, and likely this may become a launch pad. I know everyone's saying, oh, the MRO just got dropped off the S&P 500. I'm not really too concerned about that. So did ExxonMobil, and ExxonMobil is moving up pretty quickly as well, or at least
great look. And I love that higher low that we put in before this move. Really nice look, Jake. Can you explain on a prior chart the vortex and how you use it, and where it converges and diverges from each other? No, it was a bottom. Yeah, I think.
Yeah, I got to pull it up here.
I see. Because I've never used that indicator, so I'm trying to learn here too, bro.
Yeah, it's actually funny. I randomly found this. I accidentally typed in the wrong indicator like 3 years ago, and I found this, and just kind of like, it caught my eye, because I'm like, oh, this actually predicts trend changes pretty well. And so, like anything, I would change this based on what we're on. So I'd actually change this to 12, but it's not going to change really at all. It's actually going to make this signal smoother. And the reason why I'm using 12 is because there's 12 months in a year, and I want to look at the yearly vortex. I want to look at the yearly Williams percent range. So, with the daily, that's why we changed it to 5 or 10, because there's 5 trading days in a week. So if you want to do a 1 week percent range, 2 week, whatever. But you can see here, anytime you have divergence here between these two indicators, you kind of hit a threshold, right? So you've got, it's kind of like the RSI, where it does kind of top out at different thresholds. So anytime that you have the either the blue or the red hitting one of these thresholds above or below, that's when you know that divergence has kind of hit its critical point. And so then as the red or the blue start to converge, you can see in this case, we've got our first line here.
Yeah.
And you can see it's right in line with the MACD. So as the MACD is crossing on the monthly, and the Williams percent range is starting to move up, this starts to converge. This signal is actually when it crosses, but I mean, at that point, you generally are missing out on a decent move. So anytime the vortex starts to cross with the MACD doing its thing and the percent range doing its thing, that's enough signal for me to get in. That's why I got into Macy's earlier than now, because if I got into Macy's when this crosses, who knows? Macy's may be at $11 by then, and I pretty much just lost a huge move. But that's based on trading style. I'm willing to go in a little early, because generally I'm scaling in. I even may buy the dips if there is a huge dip on the earnings tomorrow. But so the way I like to use it is essentially anytime you've got this red at this threshold, and every stock's going to be different. So if we went to Apple, maybe the vortex indicator doesn't top out at 1.4, maybe it tops out at 1.6. So there is a little bit of a personality to these depending on what stock you're in. However, this is kind of your textbook setup. MACD starting to cross. Obviously, the MACD is a little bit of a lagging indicator, and the monthly candle isn't closed yet for the month. We still have a week and a half or whatever it is. So that's something to consider as well. But it's same thing with the blue, right? And this is kind of how I use the anything that's got a zone, right? I'm generally going to do 2 lines. So I capture this extreme high, but then I actually capture these secondary highs too. And so anytime this blue started to converge down, and then it finally crossed, blue crossed here, that was your signal that this uptrend was definitely ending. You had your MACD starting to break down a little before that. And so using the MACD and the vortex is pretty crucial.
Jake, what was the symbol for the cannabis ETF that you talked about earlier?
MJ.
MJ, and the symbol for the marathon oil again?
MRO.
Okay. What a great presentation. You keep getting better and better, Jake, on your presentation. And, I have to say this, that it's a great product that you guys have at TrendSpider, but it takes a talented technician like you to bring out the real important bullet points of what's been created at TrendSpider. And you're one of the hardest working technicians and insightful that I know. And
Well, thank you. I sincerely appreciate that.
yeah, so I mean, you're a great ambassador for the product because you're a very good technician. So
Well,
with
really
that being
appreciate it.
said, yeah, with that being said, Jake, how can people, enroll and pick up, check out your software and begin to learn some of the things that you can teach?
Yes, absolutely. So we have trendspider.com. If you go there and you go to pricing, you'll see we have quite a discount today, and we have had a discount, 53% off. So if you did want to give it a try, there's a 7-day free trial. You don't have to sign up and pay today. You essentially start your free trial. As you can see, our current sale decreases by 1% every day. So it's kind of, each day you're missing out on an extra 1%. Now, once we hit 50%
It's
off,
like your sales like the Vortex.
yeah, we're just we're starting to
Converging.
converge. Yeah, exactly.
All right.
So yeah, you can check it out there. Just trendspider.com/pricing. Now we also have something called TrendSpider University, and you'll see here that we do have something called the Technical Analysis Series. And you'll see here Vortex. I go over the Vortex for about 10 minutes, really just explaining what it is, how to use it. And we have all different types of videos to explain some of the different things that I use mostly, but also just in general in the trading realm of things when it comes to TrendSpider. And then we actually have what's called TrendSpider University, and you can go through each individual feature, and my colleague Zach does that one. So it's something that you can definitely check out by just going to trendspider.com, go to the pricing tab, and that will give you all the information on the different plans, what comes with those plans, and all that good stuff.
All right. Well, thank you, my trading warrior brother, for coming in and edifying our community here at FACE and showing your tools and how you approach the markets. And wish you and all of your business associates, your partners, your students, and your family a very happy Thanksgiving, despite everything that's happening around us.
Hey, same to you, and I really appreciate the kind words. It means a lot, and hopefully this was helpful to some that may have not heard of some of these different indicators,
Yeah.
raindrops, that type of thing before. And if anyone has any questions, you can reach out to us. Our company Twitter is @TrendSpider. My personal handle is @TrendSpider_J. So either one of those, you can reach out, and I'll help you out as much as I can.
Thank you, Jake. Everyone, thank Jake, and find him at TrendSpider, and some very unique software that could give you an edge. Find your edge. Maybe you find it at TrendSpider. So that's a wrap, everyone. And remember, don't just count your raindrops, count your blessings. And we'll see everyone tomorrow. And good hunting the rest of the session. Thanks again, Jake. And
Hey,
Jake just posted the link right there in chat for you.
Yep. So if anyone has any questions, please reach out. But Dale, a huge thank you as always. I can't wait for the next session. But as always, I really sincerely appreciate the opportunity to come on and talk.
Okay, yeah, well-deserved compliment. I'm not patronizing you. I've seen you a few times, and you are, and no one could ever doubt your work ethic. Okay, so thank you, Jake. Take it easy, buddy.
See ya. Everyone have a good week.
Yeah, we'll see everyone tomorrow. Good hunting. Adios.